I believe that trading is very simple. And I want to share that with you today, so let's get right into it. What I do essentially is I define the energy in the Forex charts. Let me show you what I mean by that. There are 5 energies. The first one is the trend, and that simply means direction, up or down. Now, some people think that's the most important thing, and they are wrong. It is not the most important thing. Trends can really trick you. What's more important actually is the second energy, and that is momentum. What momentum means is it's the strength behind the trend. So, for example, if you have a new trend starting and it's going up, we would want to trade that trend if there's momentum behind it. But you better know whether there is or whether there isn't. You have to have a way of measuring that. If there isn't, you will get stopped out and the currency markets will take your money. So actually, if there's no momentum behind the trend, we actually want to trade against the trend. We want to take a reversal trade. So momentum is absolutely critically important. The third energy, which is maybe even more important than the first two, is cycles. And I would say of all of them, this is most traders' weakness right here. The famous trader W.D. Gann once said that time is more important than price. You know, there's really only 2 axes on a chart, time and price. It's a 2-dimensional thing. And yet most people trade things that have to do with price patterns, various indicators based on price, but they ignore time. They never learned how to trade based on time. And that really messes them up. In fact, one of my mentors once said that most amateurs are actually right because they know the basics of trading, but they're right at the wrong time. So, for example, people will buy into the euro, for example, and then the market will go up just enough so they get filled, and then boom, the currency will tank and take them out, and they'll get stopped out. And then, right after that, it turns back in the original direction of their trade. And that's very frustrating for people because they say, well, gosh, I was right, but the market just stopped me out, and then it went in my direction. Well, that's because those people, those traders, have not learned how to measure time, how to time their entries with precision. And that is possible to do, and you do it with education of cycles, the third energy. The fourth energy is very common, support resistance. It's actually a blockage of the other energies. The fifth energy is fractals, again, very commonly used. It simply means looking at multiple time frames. Now, how do we measure the energy in the charts? How do we know what these energies are? We need some sort of instruments. And so we use technical analysis. And for trends, we use a simple moving average. As I say, I use very, very simple things. Everything that I use, all these instruments, they are just common. I don't use any proprietary indicators. I believe that you can use the simplest of things, things that are on most every charting platform out there, and do extremely, extremely well. So for trends, we use moving average. For momentum, we use a momentum indicator. Now, I do change the inputs to be what I want, but the indicator is on every charting platform out there. Same with cycles. I use a very common oscillator. For support resistance, we use previous cycle highs and lows, wave highs and lows, Fibonacci levels, and so forth. And for fractals, we use a confirmation chart 3 times that of the setup chart. So if you're using a setup chart of a 5-minute chart, then you would use a 15-minute chart for your confirmation. What we're looking to do is high probability Forex trading, because everything works sometimes, but nothing works all the time. So it's really a business of probabilities. With your money on the line, you want to know, will it work this time? Here we are talking about timing again. That's what it's all about, timing. Now, how do we know whether or not we have a high probability Forex trade? That is the big question. And the way we know is by simply going back to those 5 energies, waiting for the alignment of all 5 energies to tell you the same thing concurrently. That puts the odds on your side. That's when you have a high probability trade. So my whole methodology can be summarized really in one sentence. We're looking for a trend, energy number 1, that is strong, that's momentum, energy number 2, at the right time, that's cycle, energy number 3, with support at your back, That's support resistance, energy number 4, and confirmed by a bigger scale. That's your multiple time frames, and that's energy number 5. Now, because we're using energies to trade, the methodology is robust and adaptable because it's simply going to measure whatever is on that chart. Therefore, it works for all markets and all time frames. And, of course, it works for Forex because we're Forex traders, but it works for futures, stocks, commodities, options. It works for investing, swing trading, day trading because, again, it's measuring whatever energy is in the Forex, in the currency, whether it's a long-term chart, a daily chart, a weekly chart, a monthly chart, or whether it's a 5-minute chart. The energy is what it is on that time frame, and your indicators will measure what that is. And so it's very simple, and it's very objective, and that's the key right there. It's objective. You do not want any kind of subjectivity in your trading method. You want to have confidence, and that confidence comes through an objective method. We simply score the 5 energies. Each trade is based on a scorecard of 1 to 5. We have a complete trading plan. We use money management and that 5-point scorecard.